a very warm welcome. You're watching the daily edition of Your Trades. This is Priyanka Open along with me, Snehi. Market clearly was under pressure today. It looks like a profit booking, clearly weighing on both the indices, and in fact broader markets also did feel that heat. Clearly the profit booking session amid that, Nifty lost around about 100 odd points. Bank Nifty was down by the close around about 350 points. Auto pack was a major dragger today. Post M&M announced price cuts for its top XUV models, and that's what we saw the entire auto index, the top loser pack on the entire amongst all the sectors. Maruti did close with another 1.5% of gain. That's the second consecutive day post the UP registration waiver, and that's what we on the hybrid models. That's what we saw, that the auto pack has been in news for 2 consecutive days. Second biggest losing pack was metals, Hindalco, Tata Steel on Nifty. They were the biggest top losers from the metal pack. Third losing pack ahead of numbers is IT pack. Large cap IT stocks, and in fact not just large cap, mid cap and small cap also did saw selling from IT space. So overall, that all the sectors were facing some kind of pressure and kind of a profit booking session, though FMCG, which recovered by towards the later half of the day, and it was around about 1% off day's low, and that was the only sector which closed in green, and that was led by Godrej Consumer and stocks like Britannia. So overall, if you talk about sector-wise, sectorally, of course, we did saw that metals, auto and IT, they were the biggest losers, and in fact small subsectors, the way we've been seeing, they also got some hit today. Overall, the broader market was facing some kind of pressure, Snehi, and that is also because of Sebi crackdown and continuous action on the F&O segment.
F&O space. So before we get to the F&O segment and talk a little bit more about that, you have the small cap underperforming the broader markets, very steep cuts coming in on the small cap index today as well. But on the flip side, FMCG is not the only index that has closed in the green. You also have pharma and energy that have closed in the green today, and pharma, very stellar moves coming in Mankind Pharma today on the back of those 15 block deals we did see coming. Remember, we told you yesterday this was an ET Now source-based story that has been confirmed this morning, and healthy moves coming in on Mankind Pharma amid a rather somber market. FMCG, like Priyanka mentioned, closed in the green. Energy also flipped sides towards the closing of the trading session and has managed to claw its way into the green on the back of Power Grid, NTPC, ONGC, IOC and BPC, and all of these stocks have aided Nifty Energy to close in the green. But let's talk about the F&O space and Sebi's actions, because the Sebi's committee is expected to discuss suggestions on F&O next week, including an increase in margin and lot size, and we'll be getting you more on this exclusive story later as well. And also another top news of the day is the moves that we've seen on city gas distribution companies. You have the likes of MGL, IGL, Gujarat Gas. Gujarat Gas was rather flat, but MGL and IGL have done pretty well because it is expected that the government may cut central excise duty on CNG to 5 to 7% from the existing 14.4%. Other than that, both the MCure and Bansal also stellar gains on debut today on D Street. But to discuss more about what the markets shaped up to be like and what we can expect going tomorrow, because we've seen quite the fall coming in today, we're bringing in on board our technical expert today, Mileen Vasudeo, Senior Technical Analyst at Arihant Capital Markets. And Mileen, thanks so much for joining us on the show today. Nifty and Sensex have hit another record high, but that has also been completely shadowed by the fact that we have seen such negative moves coming in on both of these indices. Do you think this is the beginning of the correction that the street was largely watching out for? Because we've seen some stellar rallies being built on Nifty and Nifty Bank and Sensex. So do you think this is a one-off, what we've seen in today's trade, or do you think that this is the beginning of a slight bit of a correction that we're seeing before the union budget?
Good afternoon. If you see on the Nifty daily chart, we have a series of narrow range body formation with higher high formation. Now today even also Nifty made a new all-time high, and then we saw some kind of a profit booking coming in. But overall, we are of the opinion that some kind of a time-wise correction or a minor pullback can happen in the market. But today, if you see Nifty made a low of say somewhere around 24,141, and from there it has bounced back. Now, if you see the 10-day moving average line is somewhere around 24,231. So going forward, I would say that 24,230 levels, or you can round it up to 24,200, is a make or break level for tomorrow's trading session. If we open down with a gap, then yes, we could see some kind of a recovery in the. But if we open up in the morning, then some kind of a profit booking can come in the market. But our view is that this market is still the sentiments are positive, and this is a buy and decline market. I don't expect a sharp correction in the market. We could minor correct by 200-300 points on the lower side, but then again, buying is likely to emerge, and we are positive on Nifty, and we expect Nifty to test the levels of say 24,700. So we are looking at the target of 24,700 going forward. So buy and decline strategy should be adopted going forward.
Mileen, the way you said that you would be buyer on the declines here, and especially you spoke about the benchmark, but then how to trade in broader markets also, because major street is reacting to what possibly could come down as a crack, as a check risk in F&O segment. From here, would you recommend your recommendations from large caps only, or will you have from broader markets also?
Say it would be a mix actually. Now I've got two stocks which it looks good on the chart. One is LIC, currently trading at somewhere around 1058 somewhere. So with a stop loss of 1028 for a target of 1120 and 1150 on the higher side. So this is in a couple of weeks time it will take. The second stock is from the pharma sector. Now, if you see, pharma sector is taking a lead in this market. There is strong accumulation which is going on. Now, if you see Lupin, Alkem, they took good moves in the current weeks also, and now we are seeing a rounding base pattern on Sun Pharma, which is currently trading at 1590 levels. One can keep a stop loss of 1550, and the target would be 1670 to 1700 levels in a couple of weeks' time.
All right, Mileen, on that note, we'll let you go. Thanks so much for joining us with your recommendations. LIC and Sun Pharma. Sun Pharma looking attractive on the technicals, even the fundamentals seem to be slightly ailed by all of those US FDA investigations coming in for the stock, but well, looking attractive on the technicals nonetheless. But let's get a move on then. And with the budget just days away, all eyes will be on FM Sitaraman and whether her budget will deliver on stakeholder expectations. Targeting spending, infrastructure revamp are some of the agendas on the anvil, and we lined up expectations from some key voices. Let's hear out views from Sridhar Shivaram as well as Manish Santhalia.
I think everybody, including Sebi, Reserve Bank and the Finance Ministry, is worried about the options and futures volumes. And I won't be surprised if something in that comes which can dampen the volumes and the sentiments in the market. See, I think they have 1 lakh crore extra from the Reserve Bank. I don't think they move from the fiscal deficit target of 5.1. I think they are also committed to 4.5 fiscal deficit for next year. So I'll be very surprised if they make any changes as far as fiscal deficit is concerned. We could see some bit of reduction in taxation for the middle class. There could be some schemes for subsidy or something of that sort.
Realistic expectations on the real GDP growth translating into revenue growth, which will be reasonable. I think FRBM targets and some stiff targets to be set for FY26. For FY25, we are working with 5.8%. I hope this glide path to lower down sharply to around 5.1% in the next 1 year. Impetus on balance sheet expenditure of the government to, accelerate infra spending. Middle class, if there was not to be too much of tinkering in direct taxes, that would alleviate a lot of pain, and some additional allowances on the personal income tax, the plus rationalization of GST on a few items.
All right, that's the word coming in from Manish Santhalia as well as Sridhar Shivaram from Enam. We'll stay for a short break here. More to come on the other side of the break. Welcome back. On the derivative side, we did saw action, change of action in at least the Nifty Bank. Now there is a long unwinding, and similarly on trend for Nifty appears as long unwinding. Contracts getting unwinded here. VIX is at 14.4, but then for the 11th June expiry, if you talk about 24,400, 500, massive call writing was seen on these strikes, and hence we saw that the index was difficult for index to sustain these levels also, and we closed below these level 22,400. The most active put buying was seen at the strike of 24,200, 24,300, and that seems to be the support. But then looks like we are in for a small consolidation phase only, Snehi, the way Mileen mentioned that he would be a buyer on the decline. So let's see how it goes.
Absolutely, a small phase of correction being penciled in for the markets. At least that's what we're gathering from the put and call levels that we're seeing. But let's talk about the big story of the day, and that has to be Sebi on F&O. Now, in order to address regulatory issues and protect small investors from risks in index and stock trading and options trading, a SEBI appointed expert group on exchange trading derivatives has started discussions on multiple proposals, which includes increasing margin or lot size as well. Ankur Mishra, my colleague, is joining us with all of those details. Ankur.
Yes, market regulator SEBI has definitely come into action as far as of F&O volumes are concerned. We have been given to understand through sources that Secondary Market Advisory Committee is set to meet next week, and they are going to discuss the suggestions which has been given by the working group. Remember, a working group was formed by SEBI to understand what are pros and cons of taking the steps for checking the risk in F&O and also the investor protection. We understand that one of the suggestions which has been given by the working group has been increasing the margin as well as lot size. Apart from that, SEBI has already taken many actions you would have seen in past 2 to 3 months for investor protection. One of them has been the uniform charges for MIIs. Till now, MIIs were charging differently to customers, but they were paying differently to exchanges. Now, SEBI has said that there should be uniform charges for MIIs, and also a few of the brokerage houses, especially the discount brokerage ones, have voiced concern that it will increase the charges on F&O, and also there will be an impact on F&O volumes. Now also remember that the statements which has come from Finance Minister Nirmala Sitharaman, who has voiced concerns saying that explosion in volumes of future and option is definitely should not go unchecked, and that is a point of concern. A similar opinion came from RBI Governor Shaktikanta Das as well, who has said that from financial stability point of view, he is definitely having a look on this.
All right. Thanks, Ankur, for all that extensive detail. But we did gather an expert opinion. We spoke to Vinod Goyal, who is the National President for NME, and he elaborated on the impact of SEBI's proposal to protect a small investor. Let's listen in what exactly he said.
The term small is very vague, or it is loosely used as retail investor. Now, nowhere it is defined. If we take it as a corollary that it is opposite of the HNI. So if we take the IPO criteria, up to 5 lakh application is treated as retail. Similarly, for buyback, the quota reserved for the retail is those who are holding shares up to rupees 2 lakh on the record date. So otherwise, you see, retail in the common parlance is the persons who are trading in options on the last day, actually the expiry day. The concern is more arising from the heightened activity in the last 1 or half hour of the expiry day because of the this vast revenue potential, which may be lost to others as well as it may be gained to others.
All right, let's get a move on then and shift focus to auto, because auto company seems to be on a price cutting spree, with M&M being the latest player on to slash prices on their very popular SUV. This comes in after Tata Motors have also slashed prices recently. Our sources also tell us that Hyundai has just followed these price cuts, and they have also gone ahead and joined this entire price cut bandwagon. Now, coupled with discounts from other players, Shrishti is joining us with all of those details on which players have cut prices on which variants. Shrishti.
Well, certainly. Just yesterday, we were cheering up the rally in Maruti Suzuki, but it's the opposite news flow of a price cut coming in for M&M right now, which is definitely hammering the stock. And why so? Because the company has gone ahead and cut the prices of its top variant of XUV 700. That's the flagship model of M&M, very much high in demand. It used to be then, but the company has gone ahead and cut the prices of these variants for their top-end models. And just to tell you that these were actually 50 to 60% of their 6,000 to 8,000 of monthly volumes. But the company is also saying that this is a celebratory offer and it's going to be just for the next 4 months. But key to note is that back in the month of April, all these models used to have a waiting period of more than 1.5 months. But now the company has gone ahead and cut the prices, and what industry-wide aspect is what we are seeing is that the retail demand is actually quite low. And other than that, even the other players are also cutting the prices, and keeping that in view, the company has done the price cut. But analysts are also taking this up quite seriously. They are saying that this could actually impact the numbers of the company. On an EBITDA front, there could be a 2 to 3% impact, but for the next 4 months, there could be an EBITDA impact of 30 to 35 crores on a per month basis. So that's what analysts are factoring it right now. And on the back of this, we are seeing M&M stock is actually quite hammered in today's trading session. But it's not just M&M, it's even Tata Motors, which just yesterday announced a price cut for its SUVs like Harrier and Safari, and even Nexon and Punch EV has also got some price cuts. So across the board, we are seeing price cut, and this is indeed a good news for the consumers. But the key to note is why these companies are going ahead for these price cuts. So a couple of points we listed down is firstly is the weak retail demand in general, because for the past so many months we are seeing that it's the stagnant PV sales in the industry sentiment that we are seeing. Other than that, the inventory levels have reached an all-time high levels, and FADA also says that 62 to 67 days of inventory is actually in the system, which is a bit worrisome. And lastly, improved product availability and the cooling off in the waiting period is something that is telling the OEMs to go ahead, push these inventories into the system, maybe with a lower prices, and hence the cut in the prices that these companies are announcing. But indeed, a pressure in their overall financials is expected, and the stock price is also reacting to that. Back to you.
Thank you, Srishti, for that detail. So, looks like is it the retail demand slowing down, or maybe the unsold inventory, what seems to be the reason? But major of the auto players are taking a price cut. But the push for alternate fuel seems to be the flavor of the week. Remember, the Uttar Pradesh government announced registration fee waiver for hybrid cars, which spurred Maruti's stock yesterday and today also. We caught up with two stakeholders that will stand to benefit from this move, Maruti and Honda both. Listen in to what they had to say.
This will have a short-term impact in increasing sales. I'm not sure by how much, but impact on other states. What will happen to policy? Because once policy starts recognizing that you have to encourage alternative technologies and not only one technology, then that has a much bigger impact on the future development of vehicles and the extension of cleaner technologies. We continue to interact with government, and besides CNG and hybrids, we are also pushing very strongly for biogas and ethanol. We think those are fuels which are been produced from our own natural resources within India.
Very forward-looking decision which is done by the Honorable State of UP. And I think undisputedly, it would attract a huge set of buyers so that they can quickly adapt to the green mobility system. And it definitely encourages manufacturers like Honda, who have introduced a strong hybrid system in Indian auto space. I strongly believe, yes, it would probably motivate the other states as well, to follow a similar taxation structure for the strong hybrid.
All right, let's focus from autos. Talk about city gas distributors, because the government is expected to cut the excise duty of CNG. But what would this mean for city gas distribution companies like of IGL, MGL and Gujarat Gas? Samit is standing by with an explanation. Samit.
Well, definitely the move by the government will be beneficial for the consumers, but will also benefit the government-owned city gas distribution companies. Now, this move would most likely benefit Mahanagar Gas and Indraprastha Gas.
followed by Gujarat Gas. Now, the reduction of excise duty was in consideration for a very long time, and any reduction will make CNG much more cheaper when compared to competing fuels like petrol and diesel. Currently, if you see, using CNG comes to be around 30 to 40% cheaper compared to petrol and diesel, and this gap could further widen going forward if the taxes have been lowered. Now, as per our calculation, lower taxes would reduce the prices by around 5 to 6 rupees per kg. Now, in Mumbai, if you see, the prices are around 75 rupees per kg, and this could come down to around 69 rupees per kg if the taxes are lowered from 14.4% currently to around 5 to 7 odd %. Now, lower prices will aid in more car conversions going forward, and more car conversions will ensure higher volumes for the city gas distribution companies. Now, lower prices will also give city gas distribution companies the headroom going forward to increase prices if the cost of raw material increases or the supply of domestically produced gas comes down. So this also gives them the headroom to keep their margins stable going forward. So that's also one of the beneficial points coming in for the city gas distribution companies. Now, why it will benefit MGL and IGL more? Because CNG volumes contribute nearly 71 to 73% of the total volumes for MGL and IGL. For Gujarat Gas, the benefits will be a bit lower, given the fact that of the total volumes, only 30% comes from CNG. So this potential move that the government could announce in the upcoming budget would benefit Mahanagar Gas and IGL the most, followed by Gujarat Gas.
All right, Swami, thanks very much. That's why we saw the MGL close with 3% of gains today. But then Jinay has a list of stocks that were also buzzing in the trade on the back of news. Jinay, over to you.
Well, yes, so RVNL will be in focus as company has backed 2 orders worth 390 crores. Also signed an MOU with Tatweer, Middle East and Africa for various rail-based orders. Also signed an MOU with IMS Consultancy for providing advisory services in Nepal. Moving on, JSW on the back of Q1 updates. So the Indian operations fell by 6% sequentially, and if you talk about the total combined volumes, it stood at 6.35 million tons, which fell by 6% sequentially and 4% year-on-year basis. Moving on, Dixon Technologies will be in focus as HDFC Securities have downgraded to reduced rating with a target price of rupees 11,000 rupees. What they believe is the company is opulently valued at 75 times FY 2026 EPS, limiting its potential upside. Moving on, Lloyd Metal and Energy will be focused as company has raised 1,218 crores via QIP, and some of the investors in this QIP include Quant Mutual Fund, Inam Group and Sanjay Dangi entity. And lastly, keep your eyes on Spandana Spurti as company has allotted NCDs worth 55 crores on private placement basis.
Alright, Janai, thanks so much for taking us through that list of all the top buzzers in today's trade. But on that note, it's a wrap on this edition of Your Trades from Priyanka, me and the entire team that put this show together. Thanks so much for watching.